So the key challenges of moving from Hong Kong to UK are really around the additional tax complexities of the UK. People who've lived in Hong Kong for a period of time will know that it's a fairly simple and benign tax system, whereas the UK operates a complex and high tax system. By not getting the planning correct ahead of a move back to the UK, the main consequence could be a significant and totally avoidable tax bill. It's important that people plan ahead because things don't often happen as quickly as people would like them to. So for example, if you do need to sell a property, then it can take many months for this to happen, even if the market is particularly buoyant. By not doing so, one of the key risks is that you may face a significant tax bill that could have been totally avoidable. So the rule of thumb is you should carry out any planning in the tax year before you return to the UK. And the reason for this is there's a very clear line between the two tax years. This will give absolute clarity on which jurisdiction will have taxing rights. If you hold investments that have large investment gains, they will become fully taxable when you return to the UK. Therefore, rebasing your investment gains by selling the investment and repurchasing at a higher price before you return to the UK will help reduce and minimise your capital gains tax. Conversely, if you have investments that stand at a loss, you may wish to hold on to these and realise the losses when you become UK tax residents. Investment losses can be carried forward indefinitely and they may become useful for offsetting against future investment gains. So wrapping your investments in an offshore investment bond will give you gross roll-up on your investment returns. So there'll be no immediate liability to UK income or capital gains tax on the underlying investments. You will still be able to access some of the investment whilst you're UK resident, but these structures can be particularly useful if you do then end up retiring overseas again in the future, where you'll be able to realise any investment gains without any UK tax. One point to note as well is if you do have a personal portfolio bond, you need to ensure that this is endorsed before you move back to the UK, otherwise you may face a nasty tax surprise. You should look to establish your domicile before you move to the UK. You usually acquire your domicile from your father, and your father's domicile would be where he regards as his long-term permanent home. There are some clear tax advantages for anybody who is non-UK domiciled, or often referred to as non-doms. This is mainly the ability to claim the remittance basis of taxation. This means that individuals who have overseas income and gains will not need to report those for UK tax purposes as long as they are left overseas. For non-UK domiciled individuals, it's important that if you do intend to claim the remittance basis, that you look to segregate income and gains from your capital. That's because once you become UK resident, if you do bring any capital into the UK that is mixed with income or gains, the income and gains will be taxed first, and this will not be to your favour. For any British citizens looking to move back to the UK, it's important to review your inheritance tax position. This is because you may have spent many years living overseas, but by moving back to the UK, you will be once again strengthening your connections to the UK and possibly reigniting your exposure to UK inheritance tax. In addition, anybody who's carried out any planning may need to review their arrangements because legislation that was introduced in 2017 may well have rendered that planning ineffective. If there are any major known purchases you need to make when you arrive in the UK, it may be an idea to send money ahead of your arrival. This will simplify things just in terms of ensuring that you don't have to worry about whether you're sending capital, income or gains into the UK. Before moving back to the UK, it's important to seek financial advice from somebody who specialises in this area. You ought to appoint a financial advisor who is regulated in Hong Kong, who can advise on the UK challenges that you may face, but also help you to implement the advice that is given. Equally, that financial advisor ought to be regulated in the UK so that they can continue to give you ongoing financial advice once you become UK tax residents. An advantage of this is it will give you continuity in the financial professional that you deal with. So, if you are considering moving to the UK and you need financial advice, please do get in touch with us.